Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channel Television. I'm Ladi Williams. Great to have you join us. First off, let's take a look at what's happening with the market. Starting with the oil market now, we see oil prices fell this morning in early Asian trade as traders anticipated more supply of crude entering the market, coupled with weaker demand, and Brent crude futures there fell by 53 cents to $96.87 a barrel by early trade, while U.S. West Texas Intermediate crude futures fell 61 cents to about $91.32 a barrel. U.S. crude oil stocks rose by 5.5 million barrels in the most recent week. The U.S. Energy Information Administration showed that more than the expected increase of about 73,000 barrels. Meanwhile, reports say President Muhammadu Buhari has rescinded his approval for the acquisition of ExxonMobil's local subsidiary by indigenous oil and gas company Seplat Energy. Spokesperson in the presidency said that this was expected to keep the regulator on check at this point for the country's petroleum sector, which counted the $1.28 billion takeover talks entered between both companies earlier this year. The NUPRC on Monday said the proposed takeover of Mobil Producing Nigeria Unlimited by Seplat, an indigenous oil firm, was a regulatory matter, and it had notified ExxonMobil the transaction could not go through. And now we see that earlier today, we got that report about the Africa-China trade. We'll get that report now. Just at the moment there, we see that African-China trade is what's moving forward at this time. So we'll take the report as Stanbic there, the Expo of 2022. We'll get that report now.
What comes to mind when you think about China? Quite often, it's thought in terms of the quantum of goods and machinery into the continent. But did you know that China do require so much imports from Africa? Well, first off, welcome to Stanbic IBTC 2022 African-China Trade Expo, on-site hybrid and exhibition event.
Festival of the two-day expo.
At a trade deficit of 3-1 in favor of China, the Chinese government has a national policy to triple Africa's export by 2024, and Stanbic IBTC, a member of the Standard Bank Group, wants to be your plug.
We will discuss on trade policies, export and import strategies, international, interregional exhibitors from the Nigerian and the Chinese markets. We will also showcase through our African-China trade solution how we are able to provide access to over 16,000 Chinese suppliers.
With an African-China solution desk, it will not just help you with financing, but want to help Nigerian businesses with pre-shipment solutions, shipment, guaranteed trade agreements, validate the sourcing of products from China, and more.
We take our purpose on this continent very seriously. Internally, on a day-to-day basis, we remind ourselves that we are here because Africa is our home and we drive her growth.
The federal government has a role to play through the Nigeria Export Promotion Council.
The Nigerian Export Promotion Council has taken up this responsibility in the past 2 years to ensure that we bring these MSMEs together, we build their capacity, we train them, and we undertake the responsibility of bringing an expert that will certify their processes of production and issue that certificate for them.
It has also generated an online exhibition via an app where you can visit booths for equipment, farming, manufacturing, packaging, and virtual matchmaking of verified vendors.
My colleague in China explained earlier just the process and the current intervention, the incentives that are there for African businesses, where there's special economic zones in Hunan province for you to go set up, whether it's your warehouse or your business there. If you want to take your raw material and process it there, those are currently in play.
The natural outcome of that is that we're going to have more foreign currency inflows into the country, more forex. So the whole event that has been arranged here is actually aimed towards that and supporting the CBN's RT200 drive as well.
Trade is the driver of international economic stability. Stanbic considers its efforts at facilitating growth for Nigerian and Chinese businesses by connecting them to opportunities, thereby reducing the trade imbalance.
And for commodities market update, we have Juliet Adenuga, Head Treasury Financial Derivatives Company, joining us right here in the studio. Great to have you again.
Thank you for having me, Ladi.
Yeah, so we saw that inflation figure from the U.S. and it's a moderation this time. It's not as we expected, another high. This time it came down. How are you seeing that?
Well, it wasn't as if it wasn't expected, because already they have started setting the monetary policy in motion to attack inflation and ensure that it doesn't continue trending upwards. With the headline inflation at now 8.5%, while the core inflation is at 5.9%, I don't think it's even gotten to what the Fed is going in for, because they have a target of 2% or a benchmark of 2%. So it's expected that they will put everything in motion to ensure that they keep having a downward trend in terms of inflation, because inflation is very, very detrimental to their economy. So I expect that the Fed will still, find a way to ensure that the monetary policy put in place to hammer on inflation and to deal with inflation continues, even though it might not be as steep as it's been initially with their 75 basis points increase. But with the tapering down of inflation and the impact it's having on the economy, the opening up, and the hope and the expectation of the people, and how it's affecting demand also, especially with respect to what happened to the gasoline price, the dropping to as low as below $4 for a gallon of gasoline. It's now on around $3.99. So with that and the increase in demand and a little bit of improvement in economic activities, a little bit, I think that the Fed might not hammer as before, but they are not going to stop, because the price of other things like food hasn't been curtailed. Things like housing is still an issue, and that housing is very tightly connected to interest rates. So I think the Fed might want to kind of like also tidy up with what is left of what they plan to do in terms of monetary policy measure to hit down on inflation, so that it can reflect fully on things like mortgage, so that people will really know, like their basket, they really know where they are and what they are facing. Quite interesting. And I also see there that the gasoline price there in the U.S. is down about $4 a gallon. That's also helping, I guess. Very, 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 very positive for the economy, because initially people had to cut down on consumption. People had to cut down trips. People had to find alternative ways of ensuring, because that was very, very high. In June, it was $5.02, an all-time high for them. They are not used to such, expenditure, because people don't really, spend that way in America. So they had to begin to curtail. I know when people curtail activities like traveling, transportation, going to work, it's just like squeezing the economy. The economy begins to, once activities begins to reduce, it's not good for them. So with this positive change, gasoline prices, very interesting. You see that very positive, and it's demand. You will notice people will pick up. People will become more interested, even though they've not reached where they are going to. They've not yet gotten to what is best and ideal for every American to afford. Yes. Because I remember when the gasoline prices started going up, I saw on social media how people were making fun of it, showing that for you to buy gas in the U.S., it's a big thing. It showed that you have money. At that time. Most people commute with buses. Exactly. Yes, most people commute with buses, but the effect, it landed also on the face. So that means seeing this moderation now with the inflation rate, that means we're seeing some impact, from the rate hikes. About 3 rate hikes we've seen from the U.S. Yes. That means this is a sign that it could be working. Yes, it could be. Of course, that is the monetary policy measure that is supposed to curb inflation. When they tighten, that is just pure economics. It's supposed to, because that tightening will cause people to spend less. They will begin to conserve. They want to invest, because interest rate is more attractive. It becomes more attractive to save. The marginal propensity to save increases, and people consume less. So that's basic economics. It's supposed to have that effect, all things being equal. And it's good that it's making that impact on the people. But one has to also be careful that recession doesn't creep in. That is why I was trying to say earlier that the steepness of the measure might not be as, the application might not be that steep, because there's a way the Fed can go about it that will make for a soft landing and help them to avoid the recession that was looming in the horizon earlier. And I'm wondering, is it time for us to start celebrating, with this moderation now? Maybe we can see global inflation actually start inching down. Hopefully it has peaked. Affects us, Nigeria. Exactly. Well, I don't think it's time for us to start rejoicing. I have my reasons because, you know, our food basket is different from theirs.
Right.
Not different as in that we don't have food, but what's caused our own inflation, or the factors that drive our own inflation, have so many undertones and so many other factors that, you know, cause it to be. If you look at the inflation we are facing now, we have that challenge of so many other things that are factors that are exogenous, as more structural than theirs. And then we having to deal with some particular structural issues. It cannot be a magic. We cannot just even apply just that tightening of the policy, monetary policy, and expect our own inflation to just drop alongside.
Right.
What is happening in the US can benefit us in that we might not import. Our problem of, you know, we are importers.
Exactly.
Our problem of imported inflation might reduce. Our import bill might reduce, which might be good for our external reserve, and also help us be able to give the central bank more to use to defend the naira.
And get rid of some of that imported inflation, I'm
yes,
guessing.
That's in that way. But I can't say that directly it's going to impact, because we have our own internal issues that's like the supply aspect,
right,
that we need to change in that, you know, like supply having to come in, we having supply to affect the price. So we can't wish it away. We have to really work on our own structural problems and issues and see how we can benefit from what is
so much
happening.
work to be done there. And I see on the flip side that China inflation increases to a 2-year high. It's 2.7%. And I'll give anything for our inflation to be 2.7%. But this is a problem.
Yeah, from where?
From China, there.
Yes, I mean, from where? You asked yourself from where? They were on like close to zero, if not
exactly.
Zero.
So it's
a big deal. But you know,
yeah.
China has been through a lot lately.
Right.
With COVID persisting, China is just like where US was a year ago. They're trying to open up. And you know, when the economy begins to open up little by little, they'll begin to receive flickers of demand. But China was able to curb inflation by being very strict. It was like a no policy. For COVID, their policies were very, very strict. They didn't like pump in, you know, China, they didn't like pump in palliatives and reliefs for people. They were very, no, they were not into that. And then the outbreak of COVID was so consistent, sporadic, and continuous, and kept dealing with consumer demand and business and demand for business. So that was what kept that inflation low. But now that the economy is opening a little bit, I know that China has so many trade partners and there will be a backlog of demand from those partners. So it's likely that the inflation might not even remain this 2.7 because demand is going to, there will be a surge, an increase in demand that might also drive the inflation rate a little bit higher, maybe to around 3 or 3 points, in that neighborhood of 3 points.
Right.
Yeah.
And oil prices there, we're seeing a dip, you know, in prices again. Well, I like when the prices of oil actually goes down, but I know the traders won't like that, but we're seeing that dip continue, and it looks like we're going much lower, you know, below the $100 per barrel.
The dip is not, it's not always that, it's fair for us because we can say that subsidy bill, you know, reduces by the dipping, but at the same time, you know, we are a huge dependers. We depend so much on revenue from oil as a nation, and if we can deal with our 400,000 barrel, you know, position of stolen oil and can get that into the economy, it will be good for our naira. It will be good for the whole economy. So the aspect of oil price being fair or being better when it dips, it shouldn't be. If we had handled subsidy, and it's not an issue that we are dealing with in this government, and then if we had also had to deal with the other aspects of what we are losing illegally, I think we will be wishing for the oil price to go on, so that our revenue, we can be able to hack, you know, get in as much, improve our external reserve, pump into the system, and ensure that our naira is stronger than what it's still.
And I just want to see energy prices, you know, going down, and we obviously know that, you know, oil prices going up, that's eating into energy prices. Yeah. But now we saw that ExxonMobil Nigeria asset sale, it hit another hurdle now, and we've seen the president has rescinded from his approval. How do you see that?
It's just a regulatory issue. It's not, more than regulation, because the Petroleum Industry Act passed last year had that provision that any major oil player that has a license in Nigeria doesn't have the right to just transfer it to another without a written approval from the Commission. So the petroleum minister, fine, gave the approval, go ahead, sell to Seplat at $1.2 billion, but the Commission said, no, we've not given you a written approval. So that's just the issue. It's not beyond the regulatory issue.
And do we see them, giving that approval at some point?
I hope so. NNPC feels they have the first right to ExxonMobil, actually, and they are also on that aspect talking about it. So we hope to see what comes out of it. It depends on what their interests are and where they want to go.
Right, and looking at the Naira now, we've seen it's fallen again. It's about 680. That's in the parallel market, and we saw that happen there. And obviously, I was expecting, the Naira would, keep strengthening with what we saw last time, but yes, we're back again, weakened.
Yes, it's just on demand. The demand is still up there. Students are going back to school. I hope you know that with what is happening with the strike, so many more parents had to push their children to study outside. And for that to happen, you need to pay school fees. And a lot of times banks now do not really have. So you have to source from the parallel market to fund your expenditure in that aspect. There is the aspect of medical health or your medical bills too that people have to deal with. Even airlines, restrictions on tickets, and people have to source for all these things from the parallel market. So it's hinged on the back of rising demand for this forex, which is a key issue. Without a corresponding supply, it will always be on the high.
Right.
You can't just do anything. That is simple force of demand and supply. And once you deviate in one way or the other, market will still return itself at equilibrium. It will do everything to return itself at equilibrium. So with the demand still high there and people are still demanding for more of dollars to do one thing or the other, it will still keep. And even manufacturers too, they are not out of all these things that we need to import raw materials. Right. They have to source for these things, and it's not there in the banks. So most times people have to also source through the parallel markets, and that is why it keeps.
We need more dollars coming in.
We really need more.
All right, let's look at the goodies now. Well, there's some good, right there. We see high cocoa price, good for exporters. What's driving sentiment there?
The high cocoa price, what's driving sentiment is actually on the back of expected reduction in supply, because now the weather is bad for cocoa. If you noticed, in the key cocoa areas in Abidjan, in Ghana and Ivory Coast, the weather has been, we thought initially it was August break we were experiencing in July, but it continued. And even the weather forecast, henceforth, further down the road in August shows that it's not a drought, like the dry season it's beaten hard, so it affects cocoa. It's not good for cocoa, and it's going to affect the output. So on that premise, that is what is already pushing up the cost of or the price of cocoa.
Quite interesting. Well, we'll keep tracking those commodity prices, see how Nigeria can actually profit from these prices. Thank you so much, Juliet Adenuga, Head Treasury Financial Derivatives Company. It's great always having you.
Thank you for having me.
All right, now after the break, we'll take the conversation further. We're looking at how Nigeria's medium-term expenditure framework, how that's looking. We'll be drilling down on what was released last week. That's in a moment. Just stay with us. This is Business Morning. And now to our next conversation. Last week, Nigeria's Budget Office published the final draft of the 2023-2025 medium-term expenditure framework and fiscal strategy paper of the federal government. The three-year rolling plan is aimed at steering prudent allocation of resources in the annual budget over the next 3 years while delivering on strong economic growth and improved welfare of the citizenry. To dissect the major highlights of this report, this morning I have Damilare Ashimiyu, Associate at Afrinvest Research and Consulting, joining me from Ikoyi. Great to have you, Damilare.
Good morning, Ladi. Thanks for having me on the show.
Yeah, good morning. So we're seeing that plan there. It's a 5-year national development plan put together by the federal government's economic team. But do you see some kind of duplicity here looking at this economic program?
Indeed, we are not having duplicity. So how it works is that most economic planning is usually a very long-term project, and most time broken down into smaller phases for effective execution and monitoring. And we've seen some countries that have economic plans of almost 100 years. The ongoing economic plan in China, which is called One Road, One Belt, is about a 36 years plan, which kickstarted in 2013. So bringing the whole narrative back home, the medium-term expenditure framework is perhaps one of the phases of the 10-year plan of this administration. We all recall that in 2019, when the president was, when he won his re-election bid, so one of his major economic agenda was to elevate or take out about 100 million Nigerians out of poverty. That led to the birth of an economic program themed National Poverty Reduction with Growth Strategy. That's like a 10-year policy project. And in between that, last year we also have the Nigerian Development Plan, which is like a more short-term phase of the 10-year plan. And now we're having the medium-term expenditure framework for the next 3 years. So if you look at the objective of these three economic plans that I've talked about, they are the same thing. So, but the idea is just that to have it more shorter in order to effectively execute and deliver on the objectives. And the key objectives of these three policies, from the MTEF, which is just a 3-year rolling plan, to the Nigerian Development Plan, which was released last year, as well as the National Poverty Reduction with Growth Strategy of the 10-year, is to, one, promote the diversification of this economy, reduce poverty, take Nigeria away from the bracket of being the poverty capital of the world, increase investment in education and health, and also drive stabilization of key macroeconomic variables. So indeed, we are not having duplicity of policies. It's just that the communication pattern has not been sufficient enough, to put up this clarity in the face of Nigeria. So basically, this MTEF will guide budgetary process over the next 3 years to achieve certain goals that will fit into achieving the Nigerian Development Plan and overall the 10-year plan on poverty reduction.
Quite interesting, and there are also some assumptions, looking at this plan. We saw that the average GDP growth rate was at 3.5%, exchange rate 436 naira to $1, average inflation rate at 16.9%, average oil price in production $66 per barrel, and 1.78 million barrels per day, all of that. But what is your take on these assumptions?
So to me, when I saw this assumption, I feel like the MTEF is just still painting a business as usual case for Nigeria. There's really nothing surprising. I'm actually expecting more, more in terms of economic planning targets for this country. But if you look at, starting with the GDP assumption, an average of 3% per annum for the next 3 years, that is not far from what we had last year at 3.4. And if you look at basic economic principles, at least from the notion of the Okun's law, for an economic growth to significantly impact on unemployment, that is, for your economic growth to reduce unemployment by 1%, an economy is expected to grow double-fold of the population growth. So in Nigeria, we have an average population growth of 2.6% per annum. So if what we are expecting to achieve over the next 3 years is an average economic growth of 3.5%, basically what we are saying is that we are not reducing unemployment at all, because you need a double fold of your population growth to achieve a 1% reduction. So it means if Nigeria is having a 2.6% average population growth every year, want to reduce unemployment by 1%, we should be growing at least about 5%. And when you look at the potential of the Nigerian economy, based on several studies we have done, we have established that the Nigerian economy actually have the potential to grow at base case at about 7.5%. So if we are moving at that kind of a pace, it means that every year will subdue our unemployment level. That is, increase number of people that are actively engaged in productive activities. But at a 3.5% growth rate, it's just like a business as usual. It is not really going to have significant effect on alleviating poverty. And also looking at the inflation assumption over the 3 years, saying inflation will average about 16.9% over the next 3 years means that prices are still going to remain elevated for Nigeria. So what that means is that by the end of the 3 years, the purchasing power of an average Nigeria would have eroded by more than 40%, because if inflation is to average 16% over the next 3 years, so that takes away about 40% of purchasing power. So I think more needs to be put in place in terms of our economic assumptions and how we intend to drive it, so that it can have lasting impact and it can achieve the kind of desired outcome the economy is looking at.
All right, let's look at the projected GDP numbers, for the period there. The share of oil contribution is estimated above about 5.0%, compared to the historical average of about 8%. Does this mean we're moving away from reliance on oil?
Yeah, so for me, if we give this part of the MTF assumption the needed effort it requires, I think this is one of the few bright spots of that rolling plan, because indeed it does not mean that the oil sector cannot contribute more to the economy in terms of absolute contribution. If you're able to ramp up our production to near 2 million barrels per day, which is our baseline, prior to when we started having high cases of bunkering and what have you. But what I think this tacitly is projecting is that the pace of growth in the non-oil sector of the economy, which is labor absorbing, will be so fast that its share will remain about 95% of the economy. And that will be very good, because that will help us in two ways. One, reducing the share of oil sector in the economy to like 5 or below, means that our vulnerability to external shocks, like what we experienced when COVID struck in 2020, when COVID struck in 2020 and oil price came down, will be very low. So our internal absorber will be strong, because the economy will be able to produce for itself and then run, independent of the dynamics in the oil market. But the downside of this is that we are not developing internal mechanism to enable us to drive faster growth in the non-oil sector, because with the recent happenings across the world and even Nigeria experience, we cannot but strive to develop our non-oil sector to make it independent, because that is where we can create jobs, that is where we can create prosperity, that is where we can alleviate poverty.
And also revenue generation, that's another problem that the federal government has been facing. But how do we make sure that what can the federal government do to make sure that revenue generation is not a problem going forward? I think a few things that are wrong with our revenue generation fundamental is the fact that number one is that we need to change our tax structure. And I want to say this with all carefulness. We practice more of a flat tax structure in Nigeria. We need to adopt a combination of it. We need to, combine progressive, regressive, and flat tax mechanism, just like we have in advanced economies. The rich, the very rich, the extremely rich are supposed to pay more tax on luxuries and other items for the government to be able to generate revenue. It's quite interesting that in this nation, for instance, we have about 109 senators, about 360 House of Rep members, who on average, right, earn about 100 million annually. Now, if you do the math of that, that's rolling to about 60 billion. So if these few set of people alone are paying the kind of right tax that they should pay, estimate shows that the government should generate at least about 11 billion from this about 500 individuals. Now, talk less of the several high net worth individuals that we have in the economy. What the government is supposed to now do for the low-end segment of the economy is to adopt a retrogressive tax, a kind of tax that takes lower from the poor citizens, so that you won't overburden them and stifle them
You know, some of the tax policies and ideologies that the government have come up with, like the one on telecoms, those are going to be imposing flat pressure on every citizen of the economy, which is not supposed to be. We need to work on that. Another thing is that the government needs to enforce the cost-to-income ban policy on government-owned enterprises. Yes, in the last 2 years, we've seen government-owned enterprises delivering revenue that is better than what we used to do before. But looking at their capacity, these agencies can still do better. And another enterprise that we also need to close for our revenue to be sufficient or to even easily grow is we need to close our subsidy enterprise. This year alone, we have $4 trillion going to subsidy. If you put that in dollars, that's almost $10 billion using the official rate. That amount alone is enough to offset about 40% of our external debt, because about 40% of our external debt. But we're going to be throwing that into subsidy. Next year, we plan to throw about 6.7 trillion, which is about 15 billion. I mean, that is huge. That is a major drain. So if all these drains are checked, government agency becomes efficient, and our tax structure is rightly rightly fixed, like what we have in advanced economy, where the rich pay more, the poor pay less, and you balance everything. I think the government revenue will grow, and we'll have more to drive economic plans and alleviate poverty across the country. Right,
plugging all those holes is another angle there that the government needs to actually take seriously. Thank you so much, Damilare Shimi, Associate Afrinvest Research and Consulting. It was great having you on the program.
Yeah, thanks for your opportunity. Thank you.
All right, now let's head on to the markets now. We saw it was a green close yesterday, and we have Ini coming in now with the details. Good to have you, Ini. Well,
yeah, thanks, Ladi. Hi.
Nice close yesterday.
Nice close. I think that's the best we can say. And thanks to Dangote Cement.
Right.
Whatever happened on that securities actually made a lot of investors happy, and then we saw them come through. Yeah. And investors gained a total of 409 billion naira.
Wow.
Investors in Dangote Cement.
Quite interesting.
Very interesting there.
So we'll say the market down,
congratulations to them.
Pulled it back up the next day.
Yes. So there you see the market was up almost 1.5% yesterday. Equities is back on that 27 trillion naira. Well, we do hope that it does stay there for quite a bit, as I always say. And then we have regained the 50,000 level there, thanks to that. And thanks to Dangote Cement, we do not hope, we hope that investors do not go about taking profits again, and then we now see opposite of that at the close of trade. And then when we look at the activity chart, the volume and the value were in the green, not the deals though. The value we see, I think about 360 was added to the market yesterday when we look at the market cap. So there you see. And then going to the sectors for yesterday, it was all green. Banking looks like is always the investors' favorite. Consumer goods was also in the green. Industrial goods, that's where you see Dangote Cement that pulled the market up yesterday. 4.35% up. Very big one there. Insurance, almost 2%. Oil and gas was the list when we look at those that gained yesterday. Now let's go to the other market now. I think the fixed income market. There you go. The federal government bonds had 8 deals yesterday, valued at 2.6 billion naira. And the treasury bonds also had 2 deals. 2 deals yesterday. That's the treasury bills bond market yesterday, valued at 2.15, while OMO had 9. I think we have Ifoma. We tried to have it yesterday, so we'll wake up for that. We're speaking with her this morning. Hi, Ifoma. Good morning. Good morning, Ifoma. All right. I do hope we can get her. So we see there the treasury bills, 2 deals yesterday worth 2.15 billion, and that's the one for February the next year, the 9th of next year. Then you have OMO in the open market, that is 9 deals also valued at 53 billion naira for yesterday. And then we'll go to the NASD market. The NASD market, we had 16 deals yesterday valued at 4.59 million naira, and the volume is 59,538. We have Ifoma now. Hi, Ifoma. Good morning.
Good morning, Ini. Thank you for having me.
Good to have you, Ifoma. It's been quiet in the fixed income market. Are we expecting?
Yes, it has.
Are we expecting any change anytime soon?
Not necessarily, because liquidity has been a very big challenge. We had a meager amount of over maturities, 5 billion on Tuesday, but that wasn't enough to fill the liquidity gaps in the market. So this has been as a result of the retail auction debit from last week, as well as arbitrary reserve debit by the Apex Bank has really caused, challenges in that market. The only activities we've seen has been the NCB auction yesterday, where we saw a general increase in rates on the 91, 182, and 364 days. But that was expected since investors were, have been seeking for higher rates in the light of increasing interest rates all around, whether locally and globally.
So when we see a situation where, of course, liquidity is tight everywhere, not just in Nigeria, but when we see a situation where it's all quiet, and even when there's been an increase in yields, we don't see a lot of movement, what happens? Investors just hold on and wait for maybe after the elections, because we had FAC, and we didn't see it make a lot of difference in the market.
No, we didn't see it make a lot of difference, because the hole to be filled has been a lot. So we've really seen financial institutions be major players at the CBN standing lending facility window and also their repo window. So for investors, they will not just hold still. We've seen a lot of movement to, more foreign-dominated securities rather than local securities. So yeah, they'll just move to, other securities that can give them better returns for their investments.
Okay, so as it is now, would you say, when it comes to equities, even crypto, a lot of markets, they say buy the dip. So when it seems kind of quiet, it's a good time for investors to get in the market. Is that the same thing with the fixed income market?
Not necessarily, because, the returns are not matching investors' appetite. So we've not seen as much activity in that space. So for crypto, yes, because you expect, okay, in time, the market will improve again. But for the fixed income space, that has been very challenging for the longest time.
So I think it's just time for investors to hold their breath and wait, and maybe some miracle will happen from somewhere. If not, we'll just wait and watch and wait and keep our fingers crossed.
Yes. Everybody's really being very cautious.
Maybe after the election, some things will happen.
Yes. That's most likely.
All right, Ifoma, thank you so much for joining us on the show this morning.
Thank you.
Enjoy the rest of your day.
Thank you.
So there you go, ladies. It's a quiet fixed income market, and it's going to be for a long time, according to what Ifoma just said.
It's been quiet for so long, and those yields not looking attractive. I was surprised, because I thought that with the allocation, that came through, that we would see some sort of movement. Right.
And then we even had an auction in the NTB yesterday, and still
nothing. And with the rate hikes too.
Is this a boring market?
Well, we like the other market. There's more action.
I mean, I think that's why a lot of people like the equities market.
Yeah.
Because it's so unpredictable. We talked about it being quiet and being in the bear territory for all through, and then out of nowhere, I guess because it's gone down to the dip, then you just see that the bull is back in the market.
Exactly. Well, we'll be watching that bull to see if he continues in the market today.
I don't think
but let's see. Hopefully no profit taking.
Yeah.
All right, thank you so much, Ini. Well, after the break, we'll head on to London. That's in a moment. Just stay with us. This is Business Morning. To London now, we have Juliana standing by right there. Great to have you, Juliana. Good morning. So we're seeing Heathrow getting back some life this time. The Heathrow boss is saying that now things are looking good. We're seeing some recovery from the travel chaos. How's it looking?
That's absolutely right, Laddie. We've had some data from John Holland Kay, who is the CEO of Britain's largest airport, what was once Europe's largest airport. But of course, there were so many issues affecting Heathrow during the pandemic. And according to them, numbers are back. During the month of July, more than 6 million passengers passed through their terminals. And this is including, or should I say, after the airport decided to put a very controversial cap on the number of passengers. So from the 11th of July, only 100,000 passengers were allowed to pass through the terminals to try and ease some of the congestion. I'm sure everybody will remember some of those pretty outrageous images showing bags upon bags stacked up in the terminals. There just wasn't enough bag handlers, and some passengers were waiting hours upon hours to pass through security. So because of the cap, Heathrow say that things are going much more smoothly. Passengers on average are passing through security within 20 minutes, which of course is good, especially if you're travelling with very young children. And they've also forecast that in this current quarter, so the third quarter between July and September, they're expecting 12 million passengers. And if they are able to achieve that forecast, then Heathrow will regain its title as being Europe's busiest airport. But I think airlines are still a bit teased off about what happened. TUI, they did a trading update earlier this week, and they said that they are going to be seeking compensation from Heathrow because they were ordered to have this cap and reduce passenger numbers by 10%. And of course, that's a knock-on effect, because if you have a last-minute cancellation, you are going to reap back that money from the airlines, and the airlines say they're going to be reaping it back from Heathrow.
Quite interesting. So much happening with Heathrow at the moment. But another survey shows house prices are still rising, despite demand falling.
Yeah, that's right. We're having a little bit of mixed data, aren't we, from the housing market? Because according to Nationwide and Halifax, they're saying that house prices are falling, not by much, between about 0.1 and 0.3%. And this is after years of an increase. But the Royal Institute of Chartered Surveyors have released data from a survey speaking to experts within the sector. And they said that 63% of respondents are saying that in the month of July, they've seen an increase. So according to them, the average price of a property in the UK is £293,000, which is astonishing, especially if you're thinking of climbing on the ladder for the first time. However, they are showing that demand or interest is starting to decline. They are starting to see that people are not really searching for houses, and that's obvious because we are going through, as I said, the worst cost of living crisis in about 40 years. Wages are stagnating, petrol prices are rising. There's a little bit of breaking news as well this morning as the Chancellor Nadhim Zahawi and the Business Secretary Kwasi Kwarteng meet with these energy bosses, that the energy price cap is now expected to rise to £5,000. So the average person in a year is going to be paying £5,000 for their energy, which is absolutely outrageous. I think the vast majority of people living in the UK just cannot afford that, so they're expecting a government bailout. And I think all of this data is starting to reveal itself in consumer habits. People are not buying properties, people are not spending at the shops because they're saving for a rainy day, and we know that that rainy day is coming because it's all over British media at the moment.
Right, the rainy day is coming. Thank you so much, Juliana. We'll get more updates later on. Thank you.
Thank you.
All right, now let's head on to other markets. Now we see what's happening in the crypto space. There we see sentiment there, 41 points back to the 40 region there, but it's still fear we're seeing in this market right now. It's 41 points. Yesterday we were about 31, but we're seeing, quite a bounce, in the market. It's looking quite good. Let's see the price of Bitcoin this morning there. We see its market cap, Bitcoin at $24,516 up about 0.37, down 0.37%, but it did bounce up heavily yesterday. We saw Bitcoin was trading about 22,000, but when that CPI data came out, we saw that the market reacted positively. Same with other markets we track in the US, and we see that Bitcoin there, the price correlated to those markets. We saw Bitcoin react to $24,500. Now we're looking at that $25,000 mark at this time. It could get there. Volume traded, $36.99 billion traded in Bitcoin. Let's look at the price of Ethereum. We see Ethereum there trading at $1,886. It's a little pullback there, 0.74%. Volume traded $27.41 billion. So now Ethereum, we're looking at that $2,000 mark at this point. That's what traders are watching. That might actually happen because we're seeing that merge, pop up the price of Ethereum at this point. Let's look at the top alts. That chart there, the chart right now, we're seeing Bitcoin there, $24,512. We're seeing some seesaw movement there. And looking at the indicators there, we see it's getting to an oversold region there, talking about the stochastic there at it's going to get a little twist at the end there, and we're seeing the other RSI there getting into oversold territory at this point. So we're seeing Bitcoin looking quite good at this time in the market. The candle, the price movement looking good there. We might break that 25,000 level with the way the market is looking, but now we're seeing a lot of movement there. Let's move over now to the top of the market cap. We see $332 for BNB there. It's down about 0.06%, but it has had quite a jump with that CPI data we saw. Let's bring in Rume Ofi now, digital market analyst. Hello, Rume. Great to have you on the program.
A wonderful morning to you, Larry.
Yeah, finally. Finally, Ruben.
Yes.
So,
I believe in miracles.
Yeah, so I saw a report yesterday, quite an interesting one. It says Nigeria becomes the most crypto-obsessed nation. I'm wondering why, Rume, with all the losses we've seen with the price of Bitcoin, how is that possible?
This happened actually in April when we saw a huge market pullback up to about 60% of Bitcoin, 80 to about 90 of some other altcoins, alternative cryptocurrencies. But the curiosity in Nigeria is really massive. Nigeria is topping, most especially from the Google search. It's actually tops in Nigeria, where you'll be seeing statements like invest in crypto, cryptocurrency, how to invest in crypto is the top in Google search. It only shows that the interest is growing where other countries are going down. In that chart, what really got me really fascinated is that we were ahead of countries like the UAE, even with the fact that they have a very friendly crypto regulation, and countries like Singapore. Even the US is even about ranking 12th position, and we are tops. It only shows that we are not only tops in sport, we are tops in tech, and I'm really excited about that, Ladi. And coming to what CoinGecko said in their research, it said that about 17.36 million people actually have exposure to cryptocurrency in Nigeria. This is also an indication that the authorities need to work really hard to give us regulation that suits our country for this tech to thrive really well. A lot is going on, and I think it's an opportunity to also grow our economy.
Quite interesting, Rume. But now we're seeing, Bitcoin price there jump, almost touching $25,000. And obviously, because of that CPI result we got for the U.S. But is this the bull market? Is this the one that starts the bull market?
I don't think this is what starts the bull market. All attention is being faced on CPI. CPI came up yesterday about 8.5%. It's a normal thing when it comes to situations like this, that people are not sure. People tend to hold money for the very basic things of life, food, shelter, and clothing. Nobody wants to go buy Bitcoin at this point in time. But the fact that we're beginning to see CPI rate come down, and hopefully it shows that the U.S. Fed is actually doing their work, and the market is getting excited. So it's not enough. But possibly looking at the market, I could convincingly say that 17,600. It looks to me more like the bottom for now, but anything can happen as far as macroeconomics is concerned. You can see the tension coming up from Taiwan and China because of Pelosi's visit. So all of these possibilities are what we need to factor in, because this industry is quite nascent, and it puts into mind all of the buckets of these activities going on in the world economy. But a lot of things are happening. You see the other day, BlackRock partners with Coinbase. A lot of stuff are going on. Even in Central African Republic, you see they are coming up with a lot of innovations around the Bitcoin and around blockchain. So it shows that a lot is still going to happen. Adoption is happening. Iran bought about 10 million, used about $10 million worth of cryptocurrency to make a payment for some deliveries that will be coming to their countries. And it shows that the attention is moving towards alternative finance to be able to exchange value.
Right. Well, so much to unpack there, roommate. Thank you so much. We'll be watching to see how these prices continue at this time. Thank you so much, roommate.
Thank you very much, Ladi. Thank you.
All right, now let's see what we have on the top 5 gainers there. We see Celsius there up 30.21%. We're seeing double-digit gains this morning. Lido Finance there $2.76, up 21.67%. Rune $3.10, up about 17.61%. Aave. So it's a bubbly market we're seeing this morning. Let's flip over to the top losers there. We see it's just the stable coins, and Leo token there 4.65% down, and we're seeing stable coins there inching downward, showing that traders are getting there's some skin into the market at this time. All right, that's it for the markets, and that's it on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. Don't forget you can watch this again on our YouTube channel, set for Channels Television on YouTube, and don't forget to subscribe. Thank you so much for watching. I'm Ladi Williams. Bye for now.